Hey everybody, wanted to make a video here for the end of the week. First off, let me say that this is not investment advice, and for the purpose of this channel, we're going to say this is paper trading and for entertainment purposes only. Okay, I haven't been able to make any videos this week. My daughter's back from her first semester of college, and I've just been really busy, so I haven't had the chance to make as many videos as I'd like, and put them out during the day as the market's going. But I left off last Friday. I had January 4th. 272 triple Q calls I picked up for 20 cents. They were worth 61 cents at close on Friday. I was thinking, man, I should have sold probably half of them and, just to de-risk a little bit there. But on Monday, we gapped up about 1%, and I did sell half for about 86 cents. They got up to $1.35 that day, but then you could see that was here on the 3rd. They expired on the 4th, so I sold half of them. I was able to double my investment, my initial investment on the contracts, and I was able to hold half of them, on the house. But the next day, those other half, they expired worthless here. And then we just kind of traded in a range all week. We did, we broke down here, and then we had a big green day. So we broke down this trend line, but we really just kind of, we're beating on this trend line all week and hugging this trend line. It's, you can see we had a big reaction here back in October off this trend line. I tagged it perfectly there, bounced, and then we've just kind of been sitting around this area and trading in this range until today. And the jobs report kind of came out weaker than expected. So, plus a lot of people had puts. Pretty much every YouTuber I watch bought puts yesterday, and I believe the put to call ratio is at the highest level that it's ever been on record. A couple of times just in the last few days. So that might have had something to do with it as well. But um, nobody has this trend line on YouTube. I've watched so many people on YouTube, and nobody has this trend line, and nobody's talking about it. It seems pretty important to me. It starts at the 2009 lows. I think I got two or three of them that start at the 2009 lows. Let's see. Um, Geez. Okay. So 2009 low, and it's connected to I've got one connected to the 2018 low, and then I've got another one connected to so there's the 2018 low one. But this bottom one here that we've been hugging all week is connected to the 2020 low. So 2009 low to the 2020 low. And then what validated it for me was when we hit it here in October and had that huge reaction. To me, that, it seems important. We almost hit it here, bounced, and then we're back down at this trend line. So we've held this trend line for 9-10 trading days, and we couldn't break it. Well, we broke it here, but that was a false breakdown. So today, we had a big move back up. Both times we had a false breakdown, we had big moves back up. So what I was looking for, though, I was looking for a tag of this 20 around 272 to maybe possibly up to 275, get a little bit above the 20-day, and then get a rejection. But I'm not so sure that we're going to get rejected at the 20-day, because if we look at the Dow Jones, it's well above its 20-day. It's well above its 50-day, actually. And the XLF got above its 20-day. Actually, it's above its 50-day as well. The XLF kind of broke out from this. It's not my favorite trend line, but somewhat of a breakout there on the XLF. We're at an area that we've been testing for months now. And I see we tested once. We're really here first time, second time, third time, fourth time, and we're back up here for the fifth time. So, it's kind of weakening that resistance level. It's possible that the XLF and the financials break out of this area here and continue upwards. So the RSI looks pretty bullish to me. It's pointing straight up. It's above the 50 RSI level, so looks pretty good. The MACD's crossing over. It does look similar to over here, where you were starting to get, you're getting above the 20 and all the moving averages, and then had a big sell-off. So I wouldn't be surprised if we did have the big sell-off next week, and say the triple Qs doesn't even make it to the 20-day. But being that this trend line just, it couldn't break, it's making me think that maybe we come up and make a lower high somewhere around 368, 370, and then the Dow Jones makes a higher high. So that would be a move of 37% from here. That's a huge move up, but those kind of things happen in bear markets and big corrections like this. Um, it's not out of question. We had this downtrend line. We're going to have to get above that first and have a successful back test. Get above the 200-day moving average as well, and have a successful back test of that as well. But you can see, so one of these is lying. It's either the Dow Jones is lying, and it's going to break back down and break back below this downtrend line, and we're going to continue to sell off and possibly have a crash, because that's from the triple Qs then on the monthly chart. And that's about as bearish as it really gets, is where you get below the 50 RSI on the monthly, can't get back above it. Usually that's a sign you're going to crash. I mean, you can see the only times we got below the 50 RSI was during the 2008 crash and the 2001 crash, and I went over that last week. I said I'm not sure if we're gonna stop here, and that this is a temporary bottom, come up, make the lower high, then have the crash, or just it's going to happen now. We can't get back above the 50 RSI on the monthly, and at some point here soon we're going to break down from this trend line here and go test the pre-COVID highs, which is at about 237. Probably get us. I would be sure we would get a reaction there, probably a bounce back up, but not be able to get back above these lows. That's and then at that point, I think then we'd have the crash move. But a lot of the times you're going to need the credit markets to start acting up, and specifically the repo markets have something going on where the interest rates rise to just a ridiculous level on the overnight lending, and have a liquidity crunch. And that's when you have the flash crashes and the big crashes, but we haven't seen that yet. So also another thing that doesn't line up with crashing now would be the yield curve. So usually when the yield curve inverts, you go and make one more high, or you make a lower high before having the crash move. So the yield curve's inverted now, to line up with history and what's happened in the past. You'd want to make a lower high or a higher high. And I think if the Dow Jones makes a higher high and the triple Qs make a lower high, that would be a divergence there in itself, and that could mark the final top. And it'd be right around the time that something breaks in the credit markets. That would be the time that the Fed would start to lower rates, or they might start lowering sooner. I know they said they weren't going to lower this year, but I don't think they're going to have a I just don't believe them. I think that they went too far already, and something's going to break in the credit markets, and they're going to have to turn around and pivot. But as I explained in one of my last videos, we were lowering rates in 2008. We started in July 2007. They were lowering rates all through 2008, and we still had the crash. I don't think lowering rates is going to be enough to turn things around. I think when something breaks in the credit markets and they start to lower the rates again, and I think that's going to happen sometime in this year, probably sometime around the end of March, they're going to have to reverse course, and that could take us up, or that could be at that point. That could be when we start moving back down, actually. So we could still. It's not going to be until they start printing money, in my opinion. I don't think there's a true bottom in sight until they start printing money again. And I know that sounds like a Ponzi, but that just it's been my experience. I've been watching the stock market. I'm 40 years old. I've been watching the stock market for probably 21 years or so. It's, right around my first year in college, I really started watching the stock market, and I became fascinated with it. And this entire time, that's all it's been, is a market that's fueled by cheap money and quantitative easing. So every time that they start to tighten and every time they start to raise rates, that's we usually have a taper tantrum. Something will break. They'll step in. They'll start lowering rates. We go up and we make a final high, and then we have the crash. So it would make a lot of sense if this was the bottom and this trend line marking it. It's you tag it once, twice, and I'm going to say this is twice. We got close enough to it. And then this would be the third time. A lot of the times you have these 1, 2, 3 tags and then take off. So that wouldn't be surprising at all. But I'm going to be watching it very closely. I personally don't have any positions right now. Actually, that's a lie. I do have Tesla calls. I'm not giving up on this Tesla bounce. And I was one that saw this Head and Shoulders coming way before anyone. I was calling, hey, there's going to be a Head and Shoulders here on Tesla. It's going to go to 220. The neckline's going to break, and then we're going to go all the way to $80. That was my opinion back here at 315. I had that day this was a Fed day. Um, a lot of people were saying, "Oh, Tesla looks so bullish." This, that, and the third. And that day, I bought 3-day till expiration puts. I think they were 275 puts, or no, 280 puts. I bought them for 19 cents. At the low, they were 7 cents. By Friday expiration, which was this day here, they actually got as low as 270. So they were worth $800 at the high. But I sold them early. I sold them like for 400, 450, somewhere in that range. But I only paid 19 cents. So that was to kick it off. So I was making money um, on this whole down move here on Tesla. I had the TSLQ, shares of that. That was my way of shorting it. But I did try to play some bounces, and I probably 1 for 3 on playing bounces on the way down. I mean, I was expecting some bigger bounces. I think the only one I made money on a bounce was this day right here on the 23rd, where it bounced 7%. I think that was a Friday maybe, or I think the market was going to close early that week for Thanksgiving or something. I can't remember exactly. I think that was a Friday. I'm not sure, but um, I just know I've only made money on one Tesla bounce, so I'm determined to nail this Tesla bounce. I did buy some Tesla calls on Wednesday for Friday expiration after I sold those triple Q contracts um, on Tuesday. On that following Wednesday, I bought some Tesla calls, and I could tell it wasn't going my way, so I bought some Neo puts for, like, they were 1050 puts. I bought for 11 cents. I sold those for 50 cents a contract today. I sold them a little early. They were worth $1. So they would have been a 10-1 overnight, but 5-1. So that bailed me out on those Tesla calls. So really it's kind of a wash with a small profit versus, the Tesla calls and the Neo puts. So it's really like, we didn't trade this week that much except for those trades. And with those profits, though, I bought Tesla calls 125s for next week at this low. So that's the only position that I have right now. And I don't know if it could work out. It could not. I mean, I'm expecting Tesla to go to 80 or possibly even lower when this is all said and done. But there is, kind of a divergence here on Tesla on the one day. I really like when the divergences are above this bottom line here, though, this 30 line. I don't like it when it happens below that 30 line. But and there's not any kind of divergence on the MACD, but the looks like the histogram is about to turn green. We did have a lot of high volume buying today on Tesla, and then if you can see that I've got the Fibonacci connected to the 2020 low and the last all-time high, and that you can see. I mean, we had Fibonacci's are weird. I mean, you see reactions here at the 382, bounce, went back up, broke the 382, got rejected by it. Make it a little bit bigger so you guys can see a little bit better. And then we come down to this. I believe this was the 618. So yeah, or no, this is the 50% retracement was right here. So that 50% retracement acted as or the 50% Fibonacci level acted as support. Tagged it 3 times, then went up. You can just see all these different tags. Here's the 618 right here. So the 618, I think that's where I thought, okay, there's going to be a good bounce here. That is the one time that I made money successfully playing a bounce on Tesla. The other time, I think 3 or 4 times I've lost trying to play a bounce on Tesla on the way down. But finally broke the 618, and my point is we come all the way down to the 786 here. So here's the 786. It's held the 786. Now there's also gaps over here at let's see, the gaps are at 108 and then 103.65. Now we hit that 103.65 today and had a huge reaction. Okay, so and then we got back above the 786 here. And my thinking here is very similar to NVIDIA with the Fibonacci's and tagging the 786 perfectly, and that was the bottom on NVIDIA. And then we bounce back to the 50% retracement here, that's we've been rejected every time it's hit the 50% Fibonacci. But you can see here's the 786 on NVIDIA. I've got it connected to the, COVID low to the all-time high. Tagged the 786 perfectly, and that was the bottom, for this rally here. So, I'm just that with, seeing that in the past, and then seeing Tesla hit this 786 perfectly and hold this area, it's got me thinking, well, I guess this could be a temporary bottom. Maybe come back up here to the 618, which is around 170, 170 roughly, and then come back down and finish out the crash on this stock. Maybe get as low as $80, maybe 65, maybe even 35. I mean, you don't know. This stock is highly overvalued, and I think for its valuation, it's going to need something like 50% of the actual car market for it to be worth what they say it's worth, and that's obviously not going to happen. I mean, I live here in Texas, and I live in the city though. I live in Dallas, and I hardly ever see. I mean, maybe I see 2 or 3 Teslas a day, and I probably see thousands of cars a day. So there's no way they're going to get 50% of the market share. That's just not going to happen. So this stock is still overvalued. But I think it's due for a bounce, and I really want to make some money on this bounce. So like I said, I've got 125s. I picked them up for 48 cents. I think they're worth about $1 at close. But I wouldn't be surprised if we just sold right back off and went straight down to 80 either. But it's starting to feel a little bit more bullish to me, and I know that's not just because we had an update here, but it's for other reasons too. So, the IWM, it closed well above the 20-day moving average there. We're still not above this downtrend line on the IWM. It's kind of extended. There was a downtrend line right here. Sorry, that's hard to see. This chart's a mess. But if you extend the downtrend line, you can see we got rejected here. We tagged it 3 times perfectly. Once, twice, and the third time really had a sell-off. And, obviously this looks like a bear flag. I know that. Yesterday there were so many people that had puts that were on YouTube. Everybody bought puts, but and like I said, I think the put to call ratio is the highest it's ever been in the last few days or something like that. And so just, this could just be market makers burning those people before they make the next move down. But if you look at the high yield growth, I know it just filled the gap today and it's tagging the 200 again, but this is one of my favorite ETFs to look at, is the HYG. This HYG, it can really, I guess they call it smart money, or somebody that calls it smart money. But if you can really want to know what's going on in the market, look at the HYG, and sometimes it'll tell you before the other indices say what's going to happen. But the HYG it has filled this gap. There's this trend line here, and it broke below it, hit it once, twice, back above it. Now we're back above it again. So I mean, we could sell off Monday. That could happen, and then start the next leg down. But it just, to me, it looks like we might. There's a downtrend line that starts up here, connected to here. Here, see, we broke above it. Okay, broke above it here. Got rejected, come back down, got rejected, but now we're back above it. So, I mean, I think if this downtrend holds, I think we come up here to and fill this gap right here around 78, and that's a pretty big move for this high yield growth ETF. That's 3.7%. I think the Qs would probably move up another 7% if that happened. Financials too. That's another one. The market's not going anywhere. The market's not going to go down if the financials are going to continue to go up. And to me, on the weekly, so when I say one of these one of these indices is lying. One of these ETFs is lying. Either it's tech is telling the truth and we're going to have a crash, or the Dow Jones and the XLF are telling the truth. And if you look at the XLF, it made bullish divergence here on the weekly. I mean, that's as clean as it gets on bullish divergence. Lower low in price, higher low in the RSI. It's there on the MACD as well. The MACD is now positive. It looks kind of back testing the zero line. It got above the 50 RSI line. It back tested. Now it's resuming upwards. It also went up this week on higher volume. So there's some things to look at. And we've been beaten on this area for, there's 1, 2, 3, 4. This is the fourth time we're up here in this area. So this could be the time that we break, get a successful retest, and then start to move up. Now I know there's a lot of crazy trend lines here that I have and a lot of resistance up above, but it would make sense for the XLF to continue to move up. And if that happens, the Dow Jones and everything's going to continue to move up, but the financials continue to move up. But another good thing to look at too is Meta. And if we look at Meta on the 1 day, this is kind of more to support the bull case. Is yes, it's filling this gap here, and it's tagging the 20 day that's the 100-day moving average. And that would be a place that you would, you get rejected. But on the 1 day, the RSI, you can see it here, it's pointing straight up. So RSI is pointing straight up. It's, well above the 50, well above the 20 and the 10. The 10 and the 20 are, have a positive slope on them. We are running into a negative slope on the 100-day, but this could be an area where you break out above and back test and then continue up, say, to the 200 right here. And if Meta is going to continue to go up, and like I said, to me, it looks, there's no negative divergence. It doesn't have to be a negative divergence to turn around and go down, but just with where the RSI is and the way it looks right here, I think on the hourly there is some divergences, but it's just not. It just has that look to it to where it could just break out and burn through the divergences. So if Meta is going to continue going up, the rest of the market is as well. So I do like the miners as well. I would like to be able to buy some shares of the miners if they got down low again. That was one of the best plays of all time. So I think Riot was 38 cents a share at the 2020 low, and it topped out at about 70 or 80 bucks. It's like a 300 to 1, something like that, just on shares over the course of a year. So they're pretty beaten down. I mean, they can obviously go lower. There's a downtrend line that's got a lot of reactions here on Riot, and you can see we're at that trend line again. But this would just be an area, and yeah, there's some divergence there on the hourly. But if you look at the daily, we just got back above the 50 RSI line. We've been going up on increasing volume, and there was a gap, I believe, over here. Yeah, a gap at $3. Oh, I'm sorry. No, that wasn't the gap. Maybe it was here. Yeah, like there's kind of a gap there around 3 and some reactions right around 315. I'm not sure if that was a low. No, that wasn't the low. So I don't know. The point is that these things are pretty beaten down and they're starting to look attractive. I mean, sure, they could go back down to somewhere around this area, 79 cents to a dollar. I don't think it's going to get all the way back down to 50 cents or its all-time low. I thought it was 38 cents, but it looks like it's 50 cents. I think at the low it's probably going to be about $1, but I'm not sure how valid these trend lines are, because I think it was a different company back in 2007. But if you connect this top here to this one here, it does, it did tag it here in December of 2017 during the first big bull run. It wasn't the first big bull run in Bitcoin, but it was the one that grabbed everybody's attention, where it went to 20,000. Riot went from $1 or so all the way up to $40. So, and it tagged that trend line perfectly when we broke out of it. And now look, we've back tested it once, and we just broken below it, but we're back above it now. So we're above it. We're above this trend line. So it wouldn't be surprising to see, Riot, um, break out and come up here and test the 100-day moving average, possibly break out of this downtrend line here that goes back to, I know my charts are crazy, but I'm usually making some kind of move at these trend lines. So, I can't always, I just keep them on here. You guys can see them. Like I said, it looks crazy. It looks like, I don't know what it looks like, but it looks nuts. But we're back above this one here is the point, and we're back above the 50 RSI, going up on increasing volume. And the top three miners are going to be Riot, Mara, and Hut. Riot and Mara have the best hash rate. They Hut has the second most amount of Bitcoin out of anybody on their balance sheet. Mara's number one as far as Bitcoin on balance sheet. Riot's number three. So these are my top three miners. It's going to be Riot, Mara, and Hut. And I think Riot's is something like nine hexahash or something. That's a ton of mining power. I've been mining since 2017. It was mining Ethereum from 2017 up until just current, where they switched to proof of stake, and just GPUs, 10 miners or so with video cards, and that worked out very well. Especially when it didn't look like it was making much over the course from say 2017 to early 2020, but once the price goes from $90 to $4,000 a coin, it's very profitable. I mean, all the miners together were about $15,000 combined, and in that time, at Ethereum's high, it's about $120,000 worth of Ethereum, and it was only $15,000 to build all those miners. So I didn't have to pay for electricity too, so that definitely helped. But dollar's another thing. And yes, my dollar chart's crazy as well. Here's the daily on the dollar. Now we could come down here to this trend line that goes back to this low here. It's connected to this candle. It's a reaction here. So there's 3 data points on this trend line, and if we did that, I think that might make double bullish divergence, and at that point we could have the pullback. So, this could just be a lot of chop until something breaks in the credit markets or the Fed pivots. It's just a really weird time, and but I think it's going to be good for traders. I think there's going to be some big moves both ways, and for the most part, that's what I do. Sometimes I'll buy shares. Like today, I did buy some Lucid shares for about a little less or a little bit over $6 a share. But I'm playing weeklies and dailies and stuff like that. So and remember, this is just paper trading. We're just trying to learn how to make some money here and try to come up like Paul Pelosi. But that's pretty much it. Oh yeah, Hang Seng. This one's been on a tear. This yellow trend line here goes all the way back to this candle here in 1992. Get it connected to this low here in 98. It tagged it here in 03. Tagged it here in 08. That was the 2008 low for the Hang Seng. Finally broke it. Broke below it here, and then you had that big move back above. And then, this is obviously a very important trend line. You've got so many data points over the course of, 30 something years. It gets back above it, stays above it for a little bit, breaks it, tests it once, tests it twice, big move down. Now we're all the way back at it. So it would also, like, there's just things that look like, okay, yeah, this is where we're going to turn around, and because the Hang Seng is close to these trend lines here, so there's that one, and then this other trend line on the Hang Seng, that's from the top to this next top right here, and so that's your downtrend line on the Hang Seng. Here's your here's this trend line here. So these candles here, I mean, that's 1992, 98. Okay, well, tagged it there in the 03 low. That's the .com crash. This is the 2008 crash. Tagged that low perfectly. We actually broke it this time. I mean, that's pretty crazy that you broke that trend line, and now we're retesting it from the downside. So There's just some things that look okay. We're at all these resistances, and so we should have pullbacks and everything. But it might not be like that. You could see that this Hang Seng's been going up this whole time. The market's been going well, not the whole time, but um, for a big part of the market moving down, the U.S. market's moving down. The Hang Seng's been moving back up, and it's possibly bottomed. The weekly, it does look bullish to me, other than the fact that the MACD is not back above the zero line. Um, and we once, twice. This could be the third time, and start moving lower. So, like I said, the only thing I'm working with right now is the Tesla calls, and I think I'm just doing that of being stubborn. Let's see, get a call here. Okay. Junk bonds, yeah, you can see junk bonds. There's this one's kind of tricking me up too. Is that if we look at the daily, these lows connected right here. Okay, so we did break below it. We tagged it here once, sold off. That was in October, the end of October. So twice, 3 times, 4 times. Broke above it on the 5th. False breakout, back below it. Now look where we're at. We're right back at that trend line. You can't tell me that's not an important trend line. So, and it looks like we closed below it. So we look like we were going to break it today and close back below it. Maybe next week we'll get a small pop going into the beginning of the week, and then say the junk bonds hit the 200-day, fill this gap over here, and then we finish out the pullback, and then maybe that'll mark a temporary bottom, the pre-COVID highs on the Qs, a higher low on the Dow Jones, then go make the highs, or the higher high on the Dow Jones, the lower high on the triple Qs, then have the crash. That would give the Fed more time. What's hard for me to think about is it crashing. If it crashes right now, Jay Powell said 2 meetings ago, somebody asked him, well, what happens if the market crashes and we start to have a flash crash like COVID? He said, well, I'll just use my tools. You saw what we could do during COVID. And I'll just use those tools. And so he's saying that if something like that does happen, he's just going to print more money. If something happens in the credit markets and we start having a flash crash and things start dropping 20-30% in a month, he's going to step in and start printing more money. I mean, he said that 2 meetings ago. So I don't see him doing it so soon. They would really lose all credibility. Inflation would spike back up. Especially if they started to give money out to people, and those people are spending that money out in the real economy. I think that's a big reason why the inflation's been so bad, is because we actually put money in people's hands that they could spend and get into the economy. Before, it was all just kind of between banks, and it never really got into the real economy, and so you just had asset prices and home prices and things like that go up in value. You didn't really see it in consumer prices. But now we're seeing it in consumer prices. It's a problem. That's usually the end game, is when it starts to hit consumer prices. And so that's where we're at now, and it would just be tough if we had the crash now, and it would be really hard for him to just start printing a ton of money to stop the crash, say if the crash happened in the next 4 months or the next 3 months or something. So a lower low followed by a lower high on the triple Qs. So if that would give them the most time. And so something broke in March in the credit markets, they're gonna support, if it happens in the repo markets and you start getting liquidity crunch, they're gonna support that for a while, like they did in 2019. They'd probably be somewhere like September or so. They would be about the time they'd probably stop, and then maybe have a crash in September or October of this year. And then they would have to step in and start printing at the end of this year. That could be something I could see too. But really, what I'm saying is there's going to be a ton of volatility. I believe there's going to be a crash one way or another this year. It's just when is it going to happen? Are we going to finish off this leg down now, not get above these lows here, and then crash, or are we going to come down to the pre-COVID highs on the triple Qs, and then come up here and make a lower high and then have the crash? that would give the Fed the most time. So to me, that would make the most sense. But I don't know. I just feel like if we got down here and then couldn't get back above these lows, then that would, that would be it. That would be all she wrote, and we'd, finish out the crash. But um, we'll see. So it's going to be an interesting week. Like I said, all I've got is Tesla calls for next week, 125s. I paid 48 cents. They expire on Friday of next week, and they're worth about $1, I think, right now. So hopefully Tesla can break out of this, you know, get above this gap or break out of this range on the, I think it's on the 15-minute here. Yeah. So you see here on the 15-minute, there's resistance right here. Well, we came right up to it. So, you know, I guess we came and made a higher high on the. I'll probably get rid of maybe half the contracts on Monday if we open up and hit the 10-day right here around 116. So there's gonna be some resistance here at 116. Probably get rid of half the contracts and then just ride the rest out. On house money. No profits or anything. We'll just basically have free contracts till Friday. It always makes it a lot easier to hold the contracts till expiration, even when it's going against you. It's just, oh well, let them ride. Maybe this market, you never know. I mean, like this morning, we gapped up 1%, then we fell 1.3%, and then I'm talking about for the triple Qs, and then we ended up, at the end of the day, we're up 3% or so at the end of the day. I mean, these are crazy moves happening in a day, so you never really know. But there's a lot of money to be made in daily and weekly options. It's gambling, and that's what this channel is. It's me betting on options, and from time to time I'm going to do UFC fights and just give my picks out on UFC fights, boxing matches, football games, etc. So that's what this is, and it's for entertainment purposes only. In no way is this investment advice. I mean, these are risky plays that I do here, and it's paper trading. You got to remember that. So it's just for all fun and games. And with that said, I'm gonna leave it here, and hopefully these Tesla contracts are worth some money here on Monday, and I can get rid of half of them, and I'll hold the other half and let him ride. So maybe Elon will come out and say that he's going to do a buyback this weekend. How about a $1.5 billion or $2 billion buyback program? I think that would really kick off a nice bull run on Tesla. In that case, I think maybe we have made a temporary bottom, and Qs are going to start heading back up to make a lower high. Who knows? But I'll make some videos next week. I hope everybody has a great weekend, and I want to say thanks for watching. I'll see you next time.